So good morning everyone, and now this is my longer short video. I thought I could have a discussion while taking this walk down the beach this morning, and it's an interesting thing to do because it's not usually how you record and talk about what's happening in markets, because there are so many mixed views and we're trying to decipher. I'm taking this week really to decipher what is the right thing to really think about that. But there are some many early signals of what may be going on, and some of these early signals include things like the VIX, the India VIX. Jay was highlighting this to subscribers in the midday video that he does every day. I was doing it last week when I was traveling, and I handed it over to him, and it was an interesting observation that the India VIX was actually, it spent almost, I think, 4 to 5 months in this range of 9 to 12%. It's just stuck there, no matter what happens. Even when the market falls, it's not breaking out of that. And yesterday it was back to the top end of the range, closer to 12%. So we're actually thinking if it breaks past that 12.5, 13%, it will be a clear breakout of this range for the first time in many, many months. And could that really be telling us that something different is finally happening? Because, even though we've seen the dollar fall globally, we've seen gold and silver prices rally, some commodity prices have stabilized, like copper. Oil is still falling. So you have mixed signals there as well. Oil and copper going in opposite directions. Oil signaling weakness in the economy. Copper signaling maybe the disinflation is complete. And in the end, do we look for these global macro signals? So, subscribers asking me that, what are you really looking at to decide? Are you looking at the dollar? The dollar's fallen through the weekly averages. Why aren't you changing your view? And the thing is, we're also watching Indian cues, right? So let's forget the US bond market. Let's forget the US dollar currency for a moment. Let's just look at the Indian, right? Let's look at USDINR. Let's look at the Indian bond yield. So what happened last week? Let's look at the last 1 week. And in the last 1 week, you actually saw bond yields start to rise again a bit. Of course, they've not made a new high. In fact, the entire move up in the bond yield still looks corrective as per my original view that yields in India will go down. They just haven't gone down. The initial fall back to 7% was looking impulsive to me. I said it's wave 1, it's retraced 80%. Looks like a normal wave 2. But with global yields rising, Indian bond yields remained at the top end of the range. So that made me question, will they really go higher? US global bond yields have started to fall, and somewhere on the verge of signaling a recession if long bond yields really start to decline hard, or the yield curve starts steepening. And that is actually not just your long bond yields falling hard, but also the short-term yields, the 2-year, falling even harder, right? That's what happens where the inversion steepens, right? The inversion reinverts. So basically, the 2-year bond yield, which has unusually become higher than the 30-year, starts to go the other way, where the 2-year finally goes much below the 30-year, and that's usually the sign that the recession is already here. So that process sort of appeared to have started in the last quarter. If it pulls through, sure, it can mean yields in India are lower, but there is a problem because India is not the US. India is not a developed economy. And more importantly, India is a twin deficit nation, which means our trade deficit is always negative. So we always need foreign currency to, sort of make up for that difference in trade, which is why we're always trying to attract FI and FDI flows. And unfortunately, FI flows have been the biggest factor in this process, and that is why, we're so dependent on FI money. Sure. There's news item today that Tesla may finally complete its plans to invest in India. Apple has done that. So some FDI does happen. But net, just look at the last 4 months. FIs have been selling 30,000 crores a month. They've already sold close to 90,000 crores worth. And what that does, in effect, for a country that is net importer, that has a fiscal deficit, is that it puts pressure on your currency. So despite the falling DXY, the USDINR doesn't appear appear to go down. That's been happening, I think, most of the last 2 years with the currency pair. Every time we've seen strength in markets, I anticipated that the USDINR goes down, but it doesn't seem to happen simply because FIIs, for some reason, post-COVID, have not really been big investors. We haven't seen huge foreign inflows into, portfolio flows, basically, as we call it, into India, like we used to see before every time markets used to rally. Somehow this time around, it's not happening. In fact, there was a study I did while talking to Palak from, he's with Business World now, formerly with Business Line. If you all know him, if you're following me, investigative journalist, very smart, senior, editor at all these magazines. It looks really deep, and so when we are really talking data, because that's what we often do, we looked at the last 10 years and almost 6 to 7 years, I think FIs had negative flows on an annual basis. If you look at it, the yearly number is minus 2018, 19, 20. There's 1 year positive, 2021, post-COVID, and then again it goes negative, 22, 23. And so this really been a huge outflow. Not sure whether the reason is the taxes, direct taxes that have been applied to India, or is it really some other reason, because withholding tax is one of the big reasons why FIs would really bring in money, not bring in foreign investors, think a lot about taxes when they're really making allocations. And so that's one thought, that the only thought that comes to mind if I have to put real logic as to why FIs are selling, because only this year's interest rate movements cannot be the reason for us to think that, oh, this is why they're really doing that, because interest rate movements haven't been so big. Sure, the differential in India and US have gone, but then if it was only this year, selling has been there every year, 2017, 18, 19. That doesn't explain it. You didn't have high interest rates back then. In fact, India had higher bond yields than the US, and we are still seeing outflows. So the reason has to be something else than interest rates, and taxes. The only other reason we can think of. P notes were also banned at one point of time. All of that has probably had an effect. A lot of the trading that used to happen in SGX futures in Nifty futures has moved to SGX, which is why the volume or the quantum of positions in index futures in India held by FI is actually reduced, or there were range shifts in terms of where they are max long and max short because of these things. So I think that's the picture. Why am I talking about all this? Goes back to the USDINR, right? So USDINR is knocking at the doors of 83, 84. I keep thinking, will the markets go back to 20,000 and bring it down? Not yet happened. USDINR is still working up there. And the daily RMI, for those who know, the Rohit momentum indicator, gave a buy signal again yesterday. But it's given multiple buy-sell signals in this range of 82 to 83. Which signal should I really listen to? And what you're hearing is that big plane up there. So that's the thing with Santa Cruz, because you're close to the airport. You can actually get a lot of that noise. So it's the currency knocking at the doors of 82, 83. If it goes past that, we do get some kind of macro risk as far as India is concerned, because of the currency. And that indirectly puts pressure on bond yields, puts pressure on markets, and so on and so forth. And so every bit of time that risk comes back. So far we've seemed to have managed it, because a year back, just remember, RBI sold $100 billion of currency. And I just wonder, can they really do that every time? I mean, FIs are still selling. I'm going to sell another $100 billion when it crosses 83, 84. To me, it doesn't make sense. And the only way out then is to raise rates. And they did announce in the last RBI meet that they would do bond sales. I was surprised. I didn't expect that. I didn't see that coming. But that's the only answer, right? You raise rates to make your currency stronger if you don't want to really sell dollars from your reserves. Tricky situation to be in. Markets, though, have been overheated due to all the excess liquidity from the past. And there's been growth. We've seen earnings growing even this quarter. I think we're doing at least 20% on the index versus 30% last quarter. So I think that is helping. But at some point markets start paying attention to macro risks, and that's the thing that I really think time is coming to think about, since we peaked in September and you have this massive intermarket divergence between the broad market, the small caps and mid caps making new all-time highs, whereas the Nifty not doing so, and the bank Nifty, don't even ask, lagging behind like a nightmare, right? Even in this recent bounce last few days, Nifty is retraced almost 80% to 19,840, the level I was talking about all of the last few weeks. But bank Nifty did not do a similar kind of retracement, because even there I was talking about, and there goes the plane again, and we make some more noise. Okay, so yeah, it was easy to call a deep retracement of Nifty, but if I applied the same logic and said bank Nifty will also retrace so much, I got that wrong. Closed down for the week, so it looks like it has made a top. This most recent top that it made last week, if not crossed, is a negative sign from bank Nifty, and a huge divergence with the mid and small caps. So these are the things that are worrying. If you purely look at domestic markets, forget like US क्या कर रहा है, bond dollar क्या कर रहा है, forget all that. Look at your own market, look at what's happening here, and look for signals. And that is what we are trying to do this week, and get a clear sense of what stance we should take. So we'll give it some time. You don't always have to have a view on the market. Of course, it's our job, because I have to write every day in my Nifty daily report, trend is up or down. But in terms of communication, what we are trying to say is, let us think, let us figure it out. We need to get the next move right. And you can be patient and do nothing for a while till you're sure. And that's, I think, going to be the strategy and approach. So that's it from me, from here, Juhu Beach, Mumbai. Yeah, I'm back from Bhopal, and let's see how things go. Thank you.